Play Patton on the Rural Radio Network as we take a check of the weekly commodity trade now with Darrell Holaday, Country Futures in Frankfort, Kansas. And Darrell, coming into this week, we've talked about highly volatile weeks before, but given the concerns in the financial industries across the world, this seemed to have a whole new kind of feeling of uneasiness and volatile concern about it. How did it impact the commodity trade, though?
Well, it was a big factor. It was a big factor at all the markets. If nothing else, from the ag commodity side, well, let's say the grain side, certainly impacted crude oil, which ended up being down over $9 on the week. Now, I think there's other issues besides the financial side on crude oil. I want to be very clear about that. I don't think if you just say, well, it's down 9.75 because of the banking issues, I think that would be way too short of a comment. Sure, it had some impact, but it really, there's also some supply issues, some overall economic issues, and just not demand issues that have certainly impacted oil. And they've bumped up their supplies in the first year, and we've backed up some, if you will, some storage areas. There's certainly noticeable inventory problems there. That might work its way out as you get into spring and start seeing some more summer seasonal move. But that was a pressure. But the financial problems certainly there, affect all the commodities. Of course, everybody knows about we just have banks throughout the United States and world, some big regional banks that simply they got themselves in a bad capital situation because they invested substantially in long-term bonds when rates were a lot lower, trying to improve the yield, and that's a big mistake when you have deposits that can be pulled out at any time if that's what they're there to protect. And those bonds have gone down in value, and therefore their capital position is really poor, and that starts feeding on itself, and then they get somewhat of a run on the bank. And of course, we all know about the Silicon Valley Bank. That certainly was there. The Signature Bank. We have another one that's in trouble with that. Those are all, and I think there's more issues than just those. Of course, the government stepped in and said we're going to guarantee all the deposits beyond $250,000. Everybody thinks that's a really good idea, but boy, the moral hazards that we have developed in this country, where you reward or you don't, nobody that makes bad decisions gets penalized, is really a big issue and will hurt us down the road. But that was all aspects of the market, not only here, Credit Suisse in Europe, all factors, and then the European Central Bank did raise their interest rate 0.5 point. We got the Fed next week. All this activity has brought some uncertainty as to what they will do. Will they try to pause, or will they just go up 0.25 point, which I do think they'll go up 0.25 point, but the question is what will they signal for down the road? They have to stay on top of the inflation in my mind, but they can see what issues have been developed because of this big move up in interest rates. And then we saw higher corn and wheat, lower soybean complex. Everything was plagued by those financial concerns early in the week. Old crop corn was supported by export business, good China product. We got announcements this week of basically almost 1.4 million tons. Most of that was really bought 10 to 12 days ago. I don't understand why it takes so long to see that surface and get announced, but we also had other good sales. In this break, we talked a lot over from January and early February, most of February, talking about the fact that U.S. corn exports were horrible. If we didn't move prices down to get competitive, we were going to see us way behind where USDA had us. Of course, they lowered the exports just in time and the market breaks, and sure enough, that's where you start getting business. So price takes care of it. We've got to keep in mind that basically we've seen from high to low here in the last month and a half. We saw a break of about 85 cents in the front month of corn before it's rallied. That attracts interest. That attracts commercial interest. That's how you solve these problems, and you've certainly seen that. And I certainly think now would say USDA maybe it's got the export prices number projection a little bit low. Wheat supported by the concern about the Black Sea corridor. That also was a little supported by supporting to corn. Russia now we're down to thinking they just want to extend it for 60 days and keep negotiating. Ukraine and UN want to go 120 days. A lot of issues to that. Again, in the end, we might end up just having a corridor until we don't have a corridor, meaning we don't necessarily have an agreement. We'll have it till we don't. We'll see how that develops. That was supportive for wheat, and also dryness in the central southern plains. No real signs of anything moisture in the next couple of weeks, except we did see some of the models get a little bit wetter on Friday. And the 30 and 90-day outlooks are continuing to try to promise a change in that pattern, a wetter pattern in the central western areas. There's more south of Nebraska, that western Kansas, eastern Colorado, western southwest or northwest Oklahoma and Texas. Really is going to be important as we warm up and that wheat tries to come out. It tries to green up. There's a lot of short area. There's a lot of dry areas. Some are on the margin. we're going to need more moisture to obviously have a wheat crop. But I think that was supportive to the wheat and has been cause of some of the rally that we've seen. As I said earlier, crude under a lot of pressure. That did pressure corn at times, certainly pressured soybean oil, and the soybean complex was under pressure most of the week. May soybeans then finally did go below the 100-day moving average at 14.88 on Friday. It did it on Thursday, but rallied back. But then it got below there on Friday, and we see a lot of selling. The funds really watch those 100-day moving average. They have a lot of length in meal and soybeans, and they sold. They got rid of a lot of them. They'll get rid of more probably. This has opened the door technically. We had a very weak technical close in the beans this week across the board. Really in the beans, the meal, and the oil. On the day or on the week, May corn 634 up 17. The new crop corn was closed at 561 up 3. So you can see the old crop new crop spreads really moved. May soybeans down 31 cents at 14.76. Crop November down 44, closing at 13.13. Once again, as we came to the week's end, also worth noting that Brazil was offering beans at $1.30 at their port, $1.30 below the U.S. Gulf price. That yes, there's a lot of concern about the Argentine crop size, and we know that's been supportive to the bean market, but this may also be an illustration of just how big the Brazilian crop is. If you have that concern about Argentina, why are you offering beans at $1.30 under the U.S.? That's because you have a lot to sell. As a matter of fact, at that basis difference, you could actually justify importing soybeans in the United States. That certainly made the market nervous at week's end. May Kansas City wheat up 38 cents at 8.36. New crop July 8.23 up 34 on the week. May crude oil 66.93 down 9.75 on the week. Over in the livestock sector, they certainly had it. The financial issues had a pressure and influence there, but once again, those markets also had some other factors. I think cash had kind of run its. We got to see the futures run up. Last week we saw that in the cattle and the hogs. The hogs we talked about all along. You just continue to build big premium versus the cash index, and someday that's going to come back to haunt you. And sure enough, it did this week. A big premium. That premium came out of the hog futures with massive selling on Thursday and Friday as people just simply got tired of waiting on the sluggish cash index, and the product was weak. Cash cattle ended up being $1 lower, but they did do well. They came off the lows to some extent when we finished the week, but certainly finished the week lower. A little bit of a seasonal high that we see in the cash. The cash generally in that 164 area, 63.4. Very little 65 this week, but once again, a little weakness also in the pork product, and some weakness in the choice beef, and of course the choppiness in the cattle ahead of the cattle on feed report on Friday. On the week, April cattle 162.32 down 195. June cattle 156.40 down 2 1/4. March feeders 188.85 down 262. May feeder cattle 199.95 down 362 on the week. April hogs 79.87 down 757. June hogs down 945. Been a long time since that big a move in the hogs, closing at 93.32.
That again is Darrell Holaday, Country Futures, Frankfort, Kansas. You can always learn more at countryfutures.com. Do remember, trading futures and options involve risk of loss, may not be suitable for all investors. Do consider these risks before investing.